As a mutual fund investor, it is important for us to know how our hard-earned money is managed. Yet, many of us shy away from this exercise as it looks too complex. To make this easier, mutual fund houses disclose a fund fact sheet every month. A fund fact sheet is a concise document that gives details of a mutual fund scheme along with its performance, portfolio composition, and other details relevant to the scheme. Let us understand how to read and use a fact sheet for an equity fund to make sound investment decisions. There are 5 sections that we need to look for in a fact sheet. 1. Key information. 2. Performance details. 3. Fund manager details. 4. Portfolio data. And 5. Key ratios and quantitative data. Key information. Key information includes the basic details of a scheme, like its investment objective, nature of the scheme, plans and options available, how old the scheme is, minimum investment amount, assets under management, exit load, etc. The fact sheet also includes a product label which helps an investor understand a scheme's suitability for his risk profile, time horizon, and investment goal. Performance details. Performance details look at the historical performance of a scheme for both lump sum investments and SIPs. This section also compares the returns of the scheme with that of the benchmark index and additional benchmark index across different time periods. Fund manager details. The fact sheet contains details of the fund manager's experience, the time for which he has been managing the fund, and the track record for all the other funds he has been managing. Portfolio data. Portfolio data helps us understand where our money has been invested. The portfolio attributes to look for in an equity fund are the top 10 stocks, sector allocation, and portfolio diversification. Key ratios and quantitative data. The key ratios and quantitative data in an equity fund are portfolio turnover ratio, standard deviation, beta, Sharpe ratio, and expense ratio. Portfolio turnover ratio signifies the percentage of a scheme's holdings that has changed during a year. It is a measure of the scheme's trading activity. Standard deviation tells us how much a scheme's returns have deviated from its mean return. Higher the standard deviation, more volatile the scheme is, and vice versa. Beta tells how much a scheme's performance has fluctuated compared to its benchmark index. Beta greater than 1 implies that the scheme is more volatile than the benchmark index. Sharpe ratio measures the risk-adjusted performance of a scheme. The higher a scheme's Sharpe ratio, the better is its risk-adjusted performance compared to a scheme with a lower Sharpe ratio. Expense ratio gives the annual operating expenses of a scheme as a percentage of the scheme's net assets. The fact sheet contains the expense ratio for both direct and regular plans. Hence, these 5 sections, key information, performance details, fund manager details, portfolio data, and key ratios and quantitative data can help us take informed decisions while investing in mutual funds. Happy investing! Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.